The US just struck what's called the biggest ever trade deal with the European Union.
We've reached a deal on tariffs and trade with the United States. This is a deal between the two largest economies in the world.
It's the biggest of all the deals.
A move meant to avoid a costly trade war. But here's what no one's telling you. This victory slaps a 15% tariff on European goods. I'm talking about cars, electronics, and some pharmaceuticals.
Well, after make or break negotiations between Mr. Trump and European Commission President Ursula von der Leyen in Scotland, the pair agreed a US tariff on all EU goods of that 15%. It's half the 30% tariff that Mr. Trump had threatened to implement starting on Friday.
And while many politicians celebrate, you and I could be footing the bill. And at the same time, the Fed is stuck trying to cool inflation without killing the economy.
Economists and businesses have warned for months that President Trump's steep tariffs would lead to higher prices. So far, the evidence doesn't suggest that's happening. Inflation remained tame in May, raising questions over when exactly higher prices will take hold.
And now these tariffs could throw gas on the fire. Who really wins? Who pays? And is this the start to a stronger, more independent America, or a fragile shift into economic chaos? Let's break it down. First, what exactly is in this deal? The US just announced a 15% tariff on about 70% of European goods. That includes cars, electronics, some pharmaceuticals, semiconductors, basically a huge chunk of what American consumers and companies buy from Europe.
The U.S. struck a framework trade agreement with the European Union on Sunday. The deal, which comes after months of negotiations, imposes a 15% import tariff on most EU goods. While the tariff applies to most goods, including semiconductors and pharmaceuticals, there are exceptions.
And in return, the EU announced they will buy up to $750 billion of energy exports, plus invest $600 billion in America over the coming 3 years.
Well, Mr. Trump said the EU would boost its investment in the US by $600 billion, including a vast investment in American military equipment. Also spending $750 billion on things like US energy.
Think LNG, liquefied natural gas, renewables, infrastructure, and defense. Now, this isn't a final deal, it's a framework. And a lot of industries like agriculture, steel, and aviation, they don't know where they stand. And if either side backs out or misses its commitments, the entire deal could fall apart.
A U.S. administration official told reporters on Sunday that Trump retains the ability to increase the tariffs in the future if European countries do not live up to their investment commitments.
So yes, the US may have avoided a trade war, but the real cost, that's still unknown. So what does this mean for you? So that same SUV that just got a price drop, prices might be going up. That phone upgrade you've been eyeing could cost more by the fall. Even prescription drugs, the brand names, are likely going to get more expensive. Analysts say this deal could add $13 to $19 billion in new costs, and that's only the pharmaceutical industry alone. And when companies take that kind of hit, they pass it along. Tariffs are basically taxes, just not the kind that you see. They're baked into the cost of the items in which you buy. So while Washington frames this as a strategic move, regular American people could be paying more at the checkout. Again. And here's the kicker. Inflation has finally started to cool down.
At the same time, the U.S. economy is showing signs of strength and weakness.
There is some new data today from the Bureau of Labor Statistics showing inflation is finally beginning to meaningfully come down.
Core PCE is finally easing. CPI trending lower for now. This deal could nudge prices back up just as the Fed was getting ready to lower interest rates. So if you're wondering why things feel stuck, even when the headlines say inflation is down, this may be why. But here's where it gets tricky. Just days after this deal was announced, the Fed is planning on getting together to discuss interest rates, whether to hold them, reduce them, increase them, or simply wait and see.
The Federal Reserve's latest decision on what to do about interest rates. The Fed kicks off its two-day meeting today.
Inflation was cooling. Core CPE and CPI, it's not perfect, but they were trending lower. And the job market, still slowing, just enough to make interest rate cuts look more realistic. But here's the catch. This deal with the EU may add more pressure. If tariffs raise prices on goods and services, the Fed may feel like they have to hold off. Rate cuts could stimulate the economy, but if inflation ticks back up again, it puts them right back in the hot seat. But President Trump has been vocal. He wants rate cuts just before the midterm elections to boost the economy. But the Fed, it's signaling patience. And when the White House and the central bank are not aligned, the market starts to get very nervous. Investors are watching every word because the wrong move could trigger volatility across the stock market, housing, and even global currencies. So who really comes out on top here? For starters, U.S. energy companies. The EU is committed to buying $750 billion worth of U.S. energy over the next 3 years.
The European Union said it will purchase $750 billion of U.S. energy under this new trade deal negotiated with President Trump.
European Union is going to agree to purchase from the United States $750 billion worth of energy.
That is a huge win for exporters in Louisiana, Texas, and the Gulf Coast. Defense contractors and infrastructure firms could also benefit from the EU's $600 billion investment pledge.
European Union also going to invest $600 billion in the U.S., and that includes some investments on military equipment.
They are going to agree to invest into the United States $600 billion.
Especially if these funds flow into joint projects or U.S.-based expansions. On the flip side, European automakers like BMW and Mercedes are now staring at 15% tariffs.
Trump has announced a new trade agreement with the European Union that would set tariffs at 15%. This comes after months of uncertainty surrounding trade with one of America's biggest trading partners.
We are agreeing that the tariff straight across for automobiles and everything else will be a straight across tariff of 15%.
That can mean fewer imports and higher sticker prices for U.S. buyers. And big pharma, especially the ones making branded prescription drugs overseas, they're already sounding the alarm. Some reports estimate billions of dollars in new added cost. In Europe, some political leaders are calling this a one-sided deal, suggesting it gives too much in exchange for market access.
It's not a win for anybody. It's a miserable deal. Basically, the EU felt it had no choice but to accept the imposition, unilateral imposition by Trump of a 15% tariff.
But from the U.S. side, supporters say it's about leverage, rebalancing decades of trade imbalances. It really depends on how you look at it. And look, when rules are shifting this fast, whether you're running a business or building long-term wealth, the last thing you want to do is get blindsided. Here's a question every founder, investor, and legacy builder needs to ask right now. Is what you've built actually protected? Because most entrepreneurs think their LLC, trust, or estate plan is enough, until the system proves otherwise. We're in a time where rules are changing fast. Lawsuits are up, regulatory overreach is growing, and even your protected assets could be exposed in the wrong structure. That's why I want to put something on your radar. It's called Divine Law Masterclass, a 2-hour event online that breaks down the legal frameworks smart founders are using to restructure their business, estates, and assets in a way that's built to last, no matter what happens in the system. Here's what it covers: how to reposition your business and estate under a private legal structure outside of the reach of traditional regulatory structures. The one strategic mistake even experienced entrepreneurs make that leaves everything vulnerable. Why standard LLC, contracts, and trust aren't enough anymore, and what you need in place instead. The Trinity model uses 508 C1As, PMAs, and private trust that builds a structure that's insulated, compliant, and secure for generations. This is about control, clarity, and long-term protection, especially in a time where system risk is real. If you've worked hard to build something valuable, protect it now before the cracks in the system turn into full-blown collapses. Go to divinelawmasterclass.com to register. It's free, but space is limited. Don't wait until it's too late to secure what you've built. This deal might have started as a US-EU negotiation, but the ripple effects, they are global. In Europe, leaders in Germany and France are already experiencing backlash.
France's Prime Minister says it is a dark day, describing it as Europe being put into submission by Washington.
Some industries like auto and tech already feel like they've been thrown under the bus just to secure quick headlines. German media companies called this economic short-sightedness blinded as diplomacy. But this also sends a message to Asia and China that the US is willing to flex its trade muscles once again. And that could reshape supply chains globally, especially as countries race to secure energy deals, semiconductor supply, and manufacturing contracts. If this trend continues, we could see the world split more clearly into two competing economic blocs, with the US trying to anchor one side and China anchoring another. Take a step back from the headlines, because this is not just about tariffs or inflation. It's part of a larger shift in how America has done business. More protectionism, more America first policy, and more pressure on global alliances to choose sides. It signals a world where countries may stop relying on fragile global supply chains and instead focus on building self-contained economies. That might sound smart in theory, but it could also mean higher prices.
Everything from furniture to clothing and appliances is getting more expensive.
If you look at things like consumer electronics or furniture or toys, that's where we see a sudden spike in prices that's likely due to Trump's tariffs.
As a new report shows inflation and prices on the rise. The Consumer Price Index shows inflation rose 0.3% in June and up 2.7% from June 2024.
Slower innovation and a little more volatility in the short run. And the Fed, it complicates everything. If tariffs push inflation back up, just as wage growth slows down, they're stuck. Raise interest rates and risk a recession, or cut rates too soon and push up inflation. In short, this deal could reshape not just our trade policy, but the financial reality that you and I live in every day. So is this deal a bold step towards American strength, or the start of something much more fragile? Would you support more trade deals like this, even if it means higher prices at the store? Or do you think we're entering a new era of economic tension we're not yet ready for? Let me know your thoughts in the comments below.